You think the Nasdaq-100 is just a list of tech stocks. It isn't. It's a fortress. Guarded, curated, manipulated. A club of companies where joining grants billions and exile is nothing less than financial death. From the rise of Apple to the fall of Enron, this index has crowned kings, erased empires, and quietly transferred unimaginable wealth. Stick with me, because behind the Nasdaq-100 are forces that don't want you asking who really runs it. The Nasdaq-100 was born in 1985. Nasdaq, the first electronic stock exchange, needed a flagship to compete with the S&P 500 and the Dow. So they created not one, but two indexes, the Nasdaq Financial 100 and the Nasdaq 100 for everything else. The idea? Spotlight the fastest-growing non-financial companies. Back then, it wasn't just tech. It included retail names like Costco and PepsiCo. But as the years passed, something happened. Tech exploded. Dot-com mania in the 90s turned the Nasdaq 100 into a tech kingmaker. And when the bubble burst in 2000, trillions evaporated, yet the index survived. Slimmer, meaner, more powerful. It's easy to see it as 99.9% tech, but actually, Microsoft alone makes up around 10% of the index. Apple adds another 9%. Just two companies equals nearly 20% of its entire value. That means when Apple or Microsoft sneeze, the entire index catches a cold. Meanwhile, the other 98 companies, some perform, others don't. We'll get back to that. Every quarter, the Nasdaq reviews the list, adding new names, removing underperformers. But here's the twist. When a company is kicked out, trillions in ETFs automatically sell it. When a company is added, they buy massive amounts instantly. These forced moves cause bigger short-term shifts than most earnings reports. But who really benefits? The real winners aren't just the companies inside. Mega managers like BlackRock, Vanguard, and State Street control the majority of Nasdaq 100 ETF assets. Through QQQ, they profit from every inflow and outflow. Billions in fees, even if the fund never beats the index. They aren't just investors. They're power brokers with influence over what counts as a top tech company. Now, let's talk winners and losers. Not every company in the Nasdaq 100 is equal. Some became legends. Nvidia skyrocketed over 3,000% since 2015, thanks to the AI boom. Microsoft and Apple, the silent compounders, doubling every 3 to 4 years for over a decade. These weren't just survivors. They reshaped the index. But not everyone makes it. Zoom, once the darling of 2020, collapsed over 80% by 2023. A few bad quarters, and entire fortunes vanish as ETFs dump billions in stock. The Nasdaq 100 isn't immune to scandal. Some of its brightest stars were frauds. Enron, a Nasdaq 100 giant, imploded in 2001, erasing $74 billion in value. Luckin Coffee, hyped as the Starbucks of China, joined in 2019, then fell in a $300 million fraud scheme just a year later. And behind the scenes, hedge funds are accused of front-running Nasdaq rebalances, secretly buying stocks days before they're officially added, then dumping them into the ETF frenzy. These aren't minor quirks. They prove the Nasdaq 100 has been a stage for some of the biggest corporate dramas in history. On average, the Nasdaq 100 has returned around 14% per year since 2009. That means $10,000 invested then would be worth over $120,000 today. A track record stronger than nearly any other major index in the world. The Nasdaq 100 isn't just an index, it's a fortress, a club where entry creates empires and exile destroys them. But what do you think about all of this? Do you invest in the Nasdaq 100? Let me know in the comments. And don't forget to subscribe for more investing ideas and stories like this, because the next one might just be unfolding right now.